Welcome, real estate investors. Today, we're diving into the world of real estate investing during economic downturns. While recessions can be daunting, they also present an unprecedented opportunities for those who know how to navigate them successfully. There is a recession advantage, and some may argue that we're not necessarily in a recession or headed towards one, but it's always wise to have a plan and an experienced team to guide you through uncertain times. Making money during a recession can be a challenge due to factors like high interest rates, inflation, unemployment, and overall loss of net worth. However, for savvy real estate investors, this is an opportunity that we've all been eagerly awaiting. So what's the secret sauce? Most real estate investors rely on tried and true strategy, acquiring deeply discounted properties and creating equity through renovations. It's all about rolling up our sleeves, putting in the work, and creating value. But not all real estate is recession-proof. So we focus on assets with a strong, reliable cash flows purchased at the right price point. So what is the winning formula? Buy a discount, renovate, and collect income. And why invest during a recession? Generally, during a recession, asset values decline, presenting a prime opportunity to invest. Recessions are one of the best times to pick up undervalued real estate investments. Real estate investing doesn't only allow you to make money, but also provides an incredible tax deduction. There's also power of syndication. There's some amazing multifamily syndication groups out there that can help you invest with a peace of mind, completely eliminating any potential risk factors. And this is a great time to be on the lookout for discounted and distressed opportunities that really don't come along often. Some of you may remember the recession of 2008 as the most recent one that we can still recall. Let's take a look back at the recession of those years, which truly was a golden opportunity of a lifetime. Properties were significantly undervalued compared to the cost of rebuilding them. So this meant you could generate appreciation and cash flow as the market rebounded. And I believe that we're in the same position here today. The asset class truly matters. When it comes to maximizing safety and tax benefits during a recession, the asset class you invest really matters. So whether you're purchasing a single-family home, a multifamily building, or a commercial property, how effectively you buy during a recession sets you up for success. And sometimes you should consider becoming the bank. I believe that many real estate investors should consider becoming the bank and providing the debt for investors. And we definitely have some exciting updates coming in our multifamily projects that were purchased using the same strategies we're sharing with you today. So are you ready to seize the opportunities that recessions could offer? Well, contact us today and let's start building your passive income portfolio. This has been your trusted real estate advisor, Alex Kiren. And for more real estate tips and tricks and everything about San Francisco Bay Area trends, follow 415 Residents for more. And don't forget to click like and subscribe to our channel so we can continue providing this valuable information for you and the masses.